We're going to talk about financial projections, and it's going to be good, and it's going to be easy. So even if you've never done math before, if you say that you're bad at numbers, you're not a numbers person, you think you have to be a CFO to understand financial projecting and all that pro forma building stuff, I'm here to tell you that's not true. You're fine. We can break this thing down super simple. It really isn't complicated. It's actually super, super simple. All right, the first thing you need to start with when you're thinking about your projections, you need to start with your categorical costs. Hard things like land, computers, I don't know if you need a company car, those are your assets. That's anything you could sell for cash later. Make a list of those, okay, and what they cost, what they're going to cost you. Especially if you're a startup and you've never done a business plan before, you've never even made a revenue dollar before, this is where you start, okay? So list out any assets. Now, after you've got a list of your assets, all the things that are somewhat valuable, including fixture, furnitures, equipment, anything, again, if you sell it later, you can make money with it. So if you need to buy a desk for work, okay, if you're opening a shop, if you're opening, any kind of business that requires you to have a desk, you're going to make that a business expense, and that's going to be an asset that you can sell in a year if everything goes belly up for some reason. That's your asset. Okay, enough assets. Let's go into other costs that are non-assets, other things that you have to buy or that you have to invest into or that you have to pay money for to get your business started, but that you really can't do anything with later. So for instance, getting your LLC or your C Corp or whatever your entity is, getting that formed is also a business startup expense that is a non-asset. So it's a capital expenditure that is a non-asset expense. Okay, so those things, your logo, your website costs, anything that you need to buy, it's an absolute need for your business, but you can't liquidate it for cash later. That is your non-asset capital expenditure. All right, let's move it on. The next category you have, the next list you need to make in terms of what the costs are for your business are the personnel expenses that you're going to have. So this is paying yourself. Yes, you need to pay yourself. I have another video about that. You have to have some income for yourself unless you have income elsewhere and you don't need money from your business. Please include it. It's going to make your life a lot easier later on. So you've got your own monthly income. You've also got the income for your assistant if you need an assistant. You've got the income for consultants that you might need. You've got any expenses that are related to people in that list. Okay, after you have that, so that's like payroll, human expenditures, that sort of thing. The next category that you have are your operational expenses. One note, this is very separate from your capital expenditures because operationally, this list is things that are going to continue on month over month. Your one-time capital non-asset expenditures are one-time things. Again, your entity formation you do once. Getting your logo designed once, hopefully, unless, stuff happens. It's not always a first time done kind of a thing, but I digress. So your list of operational expenditures needs to be things that you're going to see recurring every single month. These are your overhead expenses. This is how you're going to look at your business from a global perspective. This is fixed overhead costs, aka your operational expenses. All right, now with all of that, you should have a bare bones cost estimate for running your business. This should be it. It's that simple. Just these few categories constitutes half of your financial projections, if not more than half. All right, now let's move on to the fun stuff, the revenue. Thinking about your revenue, focus on what are you going to sell? How much of it do you want to sell? That's it. Keep it high level for now. So this can be as simple as reverse engineering how much you need to sell in order to cover your expenses. So having your expenses done first gives you a lot of breathing room to make your revenue make sense. A lot of people get stuck on this idea of, I don't know what my sales are going to be in 2 years. I don't know how much money I have to make. Try not to think about it that way. Try thinking about it as how much do I need to make to cover costs? And then you find your mind will reverse engineer numbers faster and then methods, strategies for getting to those numbers. So for instance, if you're running a bookstore and you realize that you have monthly overhead cost of $10,000 a month, you can then start and say, okay, let me reverse engineer how many books do I have to sell to get $10,000 a month? And then your brain starts thinking about it from a different perspective. Half of this stuff is mindset and the way that you're looking at things. So don't get stuck on the revenues and feeling uncomfortable with making up numbers. They're all made up. Until you actually get there into the future, unless you have a crystal ball that I don't know about, until you get there, you're really winging it in terms of what you're putting on paper, but you're doing it with an intelligent guess. You're not just making things up, you're really taking a calculated approach on, yeah, what makes sense, what is feasible, what is a logical way to take that number and make it make sense. So back to revenues. Using the bookstore analogy, say that to cover $10,000 a month, you need to sell 100 books a week. Awesome. Getting that answer, plug that into your revenue category. You can also reverse engineer, well, how many customers is that? How many is that per day? How do you get that many customers per day? And so on. So that kind of forces you into a situation where you have to figure things out, but it's also not so intimidating, at least not for most people. Now, if you're working through your financials and you're trying to get everything down and make sure you don't forget anything, because when people go through this process, the biggest problem isn't understanding the idea of revenue versus cost. It's the idea of, what am I forgetting? And that's where the business plan really helps guide you, because as you're mapping out day by day, minute by minute, really what business operations look like in reality for yourself, you stumble across things like, oh, yeah, I'm gonna need like a point of sale system, a cash register or something. Things like that start to materialize and manifest. So you can write that down and add that to the business plan, add that to your costs. And those things just kind of make life a lot easier. Now, if you're working through your business plan and you need some support, I'm always here to support you. I am a resource. This is all I do is business plans. So if you're working on your financials and you want to come get some support, definitely check out the link below. Book a consult with me. I'll guide you to where I can help you the most. And until next time, stay positive.